Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are in lovely frozen Winnipeg, Manitoba, doing it live. Live on the road, my friends, live on the road. That's what it's all about. Doing a little bit of traveling, seeing the family, and still being able to do what you enjoy doing, which is seeing family, of course. All right, I just want to make sure that I don't have my usual headset on this morning, so I've tried I'm trying a different headset, so I'm kind of hoping that it works out for you guys. You can hear me okay. If you can't, please let me know. Uh, okay, good. We are live. Excellent. All right, who's first through the door today? Adi is first through the door. Mardeep, good morning. All right, let's look for. On the weekend, we discussed several different theories about where we thought price was going to go. And I'm going to quickly share that with you guys from the daily perspective. And Super JP had a great idea too. So we've gone from the premium array up here to the discount array down here. And we've gone through that range. And we've dipped all the way down to this discount array down here. So even in this largest range, we're all the way down to the bottom. We have reacted off of that. So we haven't traded through it to continue. But we have traded through this one on the downside. Now, my thoughts are that if we come back into this level and use it for support to go lower, then today becomes a significant day. If we get back above it again and go higher, then I'm obviously expecting it to go higher. If we can get above it, find support at it, and keep pushing higher. Now, JP came up with a great perspective, and that was like we've swept these lows now, and now we've actually closed above them on Friday. We've closed above the lows again, which would indicate that we have more bearishness or bullishness in store. We also have the other indices, ES and Dow Jones, have not made their lower lows. They have not taken these lows out. And NQ is the only one that has made lower lows. And when we look at the beginning of the year, the very first opening price of the year, which is right here, those other two indices have not traded below that level. And NASDAQ has. So that was the opening of the year right here. And if you look at ES, let's look at ES here. See how we're above it still? They have traded below it, but they are above it. And Dow Jones. Daily basis. Where's the first? Here's the first. Right here. And they haven't even come down below it yet. So Dow's way above his, hers, its, and yes, has dipped below it I would trade it back up and through it. We've used it as a support, and we're still going higher. NQ has not even got up back up above it yet. So he suspects that we have a bullishness ahead of us. Now, though we have this new week opening gap right here in NASDAQ, if we close above this and come back and find some support inside that new week opening gap, which is right here, and this SIBI, we close above this today and come back tomorrow and use this as support to go higher and get through this discount array here, then I'm definitely bullish because that'll take us back above that opening of the year on right here. I'm actually going to put that little price right there. That's the opening of the year. So if we can get back, JP and I will confirm our bullishness. If we get back, if I get above here and back above this January 1st or January 2nd opening, then we're back to bullishness again. I'm still bearish for now until we see how this whole day kind of transpires right here. So we'll see how, right now we've had a nice reaction right off that inversion fair value gap. And yeah, we're right inside the daily inversion. And I do like the little kickoff we're getting here. So get down to the lower time frames and we can see some let's look at the 15-minute here. So the 4 hour, you see this reversal here? We traded above it, we came back in, tapped it, and now we want to go higher. So that supports bullishness right now on a 4 hour chart. So bullish till we get to our point right here, and now we're starting to get our overlap. I take it down to a 15-minute chart or a 1 hour chart. We have, this is Friday. Here's our opening. We traded through it. Let me make this bigger so you can see this. Can you guys hear me okay? Kamal, good morning, good morning. Craig, good morning. And Quick Solutions, hello, hello. Welcome to Monday. I'm just doing an audio check. Can you guys hear me okay? Okay, so, yep, okay, good. So we have this opening. See how we have this bearish run into here, that institutional order flow entry drill, just popping into that busy and then continuing to go higher. That's what we were looking for on the weekend when we're talking about, we'll see how we act on this level. If we can get above that, then I'm into bullishness again, still reaching for higher time frame perspective, which is be this first new day opening gap at 0.226, and then if we can get above that, then I'll be looking for 0.227, and then reaching up into the new week opening gap and taking these old highs out here would be my next objectives on the 1 hour chart. And that still keeps us inside this, still keeps us inside this daily. Right now we're on a 1 minute chart, we're definitely bearish, obviously. And you're looking for the 6 a.m. the 6 a.m. candle. the 4 a.m. candle and the new, or the Monday's open range. Morning, AI. So that's where we're kind of sitting right now. Let me put this back on an hourly. That'd be 15 minutes there. This would be, we're going to put this as the 1 hour. Let's see if we can stretch that out, and then we'll put the 15-minute here. I already get much of a perspective on that. So if we can get back through this new week opening gap, get to the other side of that, and use that as support to continue coming lower. That's one of those graded responses inside here. So now we're just starting to retrace back into an old high. We have that fair value gap missy here that we're just coming and filling. So if you want to see this continue going higher from here, get back through this higher level on the 1 minute. So right now we're still bullish inside this level, all the way up to the top of it. And we'll see how we act inside that once we reach or breach the top of this daily inversion fair value gap. And did you mark the 8:30 candle, he says. Let's look for this 8:30 level. This is these 8:30 level. We're going to see that bold, and I want to be able to see it on the top, and I want to see it on the right, and we're going to save that so that I got that as so say we can find support on here, and I'm reaching for up in this little box right here, right up to the 8:30 candle again. Good morning, Hans. 600 points. Let's kind of go through these levels quick. So we've got this discount array. See how we've come all the way down to the discount array? The bodies have respected it, and then we started pushing higher. So if this continues to make it through this candle, this little swing point, come back and find support in that candle. I'd like to see support around 5994, and then start pushing higher, and you're reaching for that premium array again, way up here. And then eventually those equal highs that are still untouched. I don't know why that one is there. And it goes down to there. We get back through it, worked inside it, now above it. I'd like to see us get back into this premium box up here now in Dow Jones. the top 75%, or the last 25% of that imbalance is not filled yet. So we're finding support inside here, looking for the upside. So looking more bullish in these two indices. British pound. I do like the fact that we traded above this, came all the way back down inside it, and just nailed it nicely here. Continue going higher. Here's your premium array. You traded through it, come back down into a discount, fit through it again, back inside this one, extend the range. And this one just feels like we want to keep climbing here. We get above 12717, this last little SIBI here. And that's just a fair value gap, so I'd like to see us get through that and use that as an inversion to take out these next highs. Euro. They got equal highs above them. I'd like to see we're just approaching this first reverse opportunity. I'd like to see us get above this on a close today, come back and find some support in here to start running up the rest of the week to take that higher. Oil. Oil's got its reverse going on right now. And I'd be looking for, if we can get above 70.89 in oil, and use 70.89 to push higher, you start looking for 71.69, 72.12, and then run for the equal highs. That's a daily. On the 1 hour, you've got reverse right here. You trade back through it, into it right here, extend the range higher. You're in the premium range, premium portion of it now, and you're just getting a kick off of it. So down on the 1 minute, you have a reversal. You traded back inside it, and now so you can see on the 1 hour, you've hit the premium array, and then you're getting a reverse direction because you've made a new high. You reverse direction, you trade back into it. Now you're back inside this range, and we're looking for way down here. Say way down here, but down here. And we're looking from this all the way down to here. That would be my discount box. And it's pretty much this BISI right here. This is not an inversion, but this is more what I'm interested in. So we come down to give this a little tap. We find support off this breaker, which we are right now, and we continue to change direction, come back on support here, look for another run above these highs. Like this is just a return back to 50% of the range or more. That's probably like 62+% of that range, that large range there, 62% right on the money. Now that'd be great to see it just pull out of here and start reaching for this upside objective today of $71. So if Craig is here. Good morning, Craig. There's your oil opportunity. Canadian dollar. they're quite upset here. They're just not buying anything American. The Canadians have been miffed. They had a no one's going to Walmart day here the other day. These Winnipeg people are quite miffed at the idea of these tariffs, so they're stopping buying anything American. Other people are checking labels and where it's made, and they're trying to go all Canadian. And our GDP has actually gone up, and people are spending more in Canadian stuff now. So it's funny how one man can stir up so many people. Yeah, that's CAD. Bitcoin. You're in this premium portion of this range that we're in right now. Bitcoin had a big drop, hey? $78,000 it dropped down to. So we'll see how we're back into this little box right here. Tapped it, we're getting a bit of reaction out of it. I'd have to wait for it to clear these highs to consider that more bullish right now. You're just bullish inside this run, and you didn't get an opportunity to catch anything in this candle on Friday or yesterday. Yeah, Sunday's candle. So now we've got today's candles come back and retapped it. You're looking for higher prices, and again, that's not even 50%. So if you're buying that, you're buying it at a premium. So if that rolls over now and comes back lower, you would have bought at a premium, and you still can't unload it. Trade it back above this level or above this. Use this for support. You've only got this upside objective right here, which you've already reached. Yeah, I'd wait. Gold. Let's look at gold on an hourly basis. I like gold on a 15-minute. Let's see what that's up to. Takes out a premium portion, comes back inside it, support, runs higher. Looking for this objective up here. Not quite there yet. Just above price action now. So you're looking for right there. 15 minutes, and if you get up on top of these, look for higher prices. Next objective up after that be obviously these old highs, and then up to here. I don't have a mouse, so I gotta use these little track pads. Okay, so that's the next little bit for gold. If we get back through this candle, we have to get through this level here. downside you don't want to see broken to. Otherwise, reaching for these equal lows below you. TSX, we're back into this discount, looking to run through this premium level right here, which we're just clearing. If we can get through that, looking for equals, these relative equal highs above us, and Aussie, the highs above that. UNG, the natural gas. We have a pre-market that's actually above our price, so if we don't get a full fill of that fair value gap BISI here without touching this old high, that would be nice to see it just leave from here. So if this pre-market continues going higher for the rest of the week, I'd be quite happy with that. We can come all the way back into this candle. Again, I lose the love of this going higher the more we fill in this candle and start to eat into this one here. I start getting to the mean threshold of that candle, I start to lose my love that that's going to go higher right away before coming back into a deeper retracement, like at 50% of this range. Wheat, that's a nice little kickoff of wheat. We've had no retracement back into it, except for a drop below the breaker, come back into the breaker, and continue coming lower. So I'd be looking for a wheat to get down into it's pretty much almost there right now anyway. So 332.8 all the way down to 543. Is it 332? No, it's not 332. It's 552. 552 to 542. Soybeans, they've ran the bottoms out now, so you come back and find support at 103, 103.5, and then continue going lower. If they just take off from there, your next downside objective would be 994. No, not 994. It would be 10. So 1,000 big figure. And soybeans. Coffee. I don't have much in coffee right now. If we get above 379 on a close, then I'd be looking for $400 big figure. Cotton. I haven't had cotton. I'm telling you, it's my laptop now. I never usually use. Oh, cotton was on there before we put corn on there. Let's see where that closes today. It needs to close below 66.3 to keep coming bearish. Interesting. Sugar is now we're back into this BISI here in sugar. See how that CIBI inversion is holding price all the way down to this little imbalance. We've got this little imbalance right here as well. We've come back and tapped that. Had a nice reaction off of it. So if we can get back above uh, 1870 on a close, coming back into that range again. And then what else we got here? Live cattle. Let's have a look at what the live cattle's up to. Run back in, take out the lows, come back into the order block, extend lower, trade back up into the breaker, trade lower. Look at this breaker here. As soon as we break it to the downside, come back, find support in it, right here, break to the downside. This next big breaker, all of these candles, trade below them, come back inside them. We've got a reverse direction here, extended the range, reverse here, trade back into it, inside this range, pop back up above it, extend the range one more time, small reverse, take out the low, trade back into the low, continue going lower. And where are we now? So live cattle, my next downside objective for live cattle. Is right here. That's live cattle. Oh, cocoa, that was an old prediction. Didn't go anywhere. What's cocoa up to? Reverse, trade back into it. Multiple times, trade back into it. Discount inside this range. Break low, trade back into, depends on what you look at these ones as. Little swings, whether a break or a mitigation, come back inside it, find some sensitivity, trade lower. Now we're looking for this consolidation down here. I'd be looking for first one. And lumber. You can stay above this level in lumber, look for higher prices. These are old ones I used to have on here. All right, let's get back to it. Now we're slowly climbing above this hourly, digging deeper into our daily inversion. What do we got here? Who we got on? It's Craig. I'm still long and crude. Good. And Disney, of course. Traded Disney 24 days in a row. That's awesome. That's almost as many times as My father-in-law's gone to Disney. I think he's been to 27 or 28 times he's been to Disney. Are you in a pantry? You have an echo. Yeah, sorry about that. I'm in a basement here. Make sure there's no other devices on that I'm going to give you too much of an echo. So looking for support off this candle here now. This old high, this candle here. %50 will put us right into that candle. At 8:30 candle here. You going to go long on that from there, Hadi? Hi, Curry Fishball. There's 50%. There's the tap of the order block. This traded above this level. This one tapped it. Change in direction to 50%. Makes sense. Now you want to see this start to accelerate. If you hit the 8:30 open here, look for that to accelerate for the next price leg higher. If we start trading through it and back through this 21062, look for a structure break and then acceleration through the lows. So he's looking for a 15-second inversion here. So if you're looking for discount arrays inside this range on a 15-second chart, you're looking right here. And what we just looked at on a 1-minute chart, right here. You'll see how sensitive this 8:30 open candle is. %62% will put you right on top of this order block here. I think it's going to reach deeper. And deeper it shall go. So look for this discount box down here. So less love for this to go higher if we start to eat through this candle, right? If you're just doing boxing though, that's a nice little run down into a boxing area here. We've already eaten through this candle. And it's a mitigation block because it doesn't take out a low. So mitigation blocks are not as strong as breakers, obviously. And this candle here is a breaker, the last down close candle. I think they're the same. So we've just returned to the breaker, trade through it. Now here's your inversion. This is what you're looking for, Eddie. Watch some pour off of here now. You gotta wait for that to close above that for me. Come and give that a little kiss. Right there. I'll go long right there. Stop loss will go just below that. I don't want to see that change directions past here now. It's right off this 830 candle. So if we start to eat through this on a close, then we're looking for lower prices and a run into this level down here still. Good morning, Paulette. How are you doing today? All I'm going to target is this premium array up here. That's the upside target right there. I'm doing very good, Paulette. Oh, it hit it, but didn't take me out. Look at that. So now I'm going to move this thing into a winner, chicken dinner. We'll see if that stuff hits my objective. Yeah, risk-free as well. So you saw the reversal here, the 830. We used the 830 to leverage going higher. I wanted that as my upside objective. It hit it, and the spread kept me out. So now you want to see this stay open and push higher. And they got relative equal highs above you here. The next upside objective past this would be 21.94. Look at that. It's going to come back and take me out right on that order block, maybe. Attaboy. Stay open. Yes, I do see how it works now, Hadi. Yeah, that 15-second inversion after you've retraced to that, it's a great little trade setup. I'm going to go for up here now. I think it's going to come. Yeah. Before it takes my profit, I'll make sure I get the... Good morning, Gina.
Good morning.
How are you?
Good.
Thank you. I have coffee. God bless her heart. Oh, nectar of the gods. Now I'm going to move my profit into a higher level. I don't want to see it come back through here. I want to see that last little piece stay open like that. That's positive. And now I want to see it reach for there. If not, then we'll settle for 6. 650. Yeah, I need to see some a blow through that. This is all immediate rebalance in here, so I'd like to see that just run for these equal highs above us. Because if we take those out, then we have range extension, right? We have further upside. And then what I'll do is I'll just use this as support. If we can trade a body above that level, come back and find support at it, I'd like to use that as support to keep going higher. So you get back in sync with it. If it rolls over here and comes back down again, I'd be looking for down into this range again, but I'd like to see some serious acceleration through here. If not, then we'll just settle for a little 1800. Yeah, man, I've gotten in this habit of managing it with the back end now. So that's like my partial. I'm saying I don't want to see that mean threshold of this candle here now get traded through. It just got me. So I don't see this meet threshold, otherwise, so we're just through it now. Otherwise, it's would have come back and called me out anyway. But quickly move to a risk-free trade, right? Are you out? You're out. Done and dusted. Now I want to see if we get back into this thing. I say with that acceleration, you want to see it really accelerate through here. Come back, give it a little kiss. It's already done this work in here. So yeah, I'd want to see it just accelerate right through there now. High five, Hadi. That was a nice setup, nice confirmation, nice entry on the 15-second chart. And here's that acceleration we're looking for. Now I want to see it. We've traded below it. Nice. Now, this is the thing I'm looking for on a 15-second chart. This is the same thing I'm looking for on a daily chart based on the daily candles. So right here is this level that we're in right now, this blue level. This is the retracement we are doing on a daily chart right now. So I want to see this retrace into it like that, and then I want to see it roll over and come back down. If we trade through it, then we're getting back into this range again, which is where we are on the daily chart. Look at your daily chart and you'll see the similar setup happening. Where we trade through this is important. See how we close above it right there? Now we're looking for a run back in this range, which means on this daily chart, if we get above this blue box right here, this is the same thing I just showed you there. That we get support on that, we start to run higher into the range. So you're on a 15-second chart. This thing here is almost the same kind of thing set up on a daily chart. Over here, you'll see that little fair value gap that we've ran through. We come back into it. We're coming into it now. We have to decide whether or not, is it going to go through it? So today, this is an important day. We see if it breaks through it, come back Tuesday, makes us some support, and we continue pushing higher, or it becomes a support level to go lower. In this case, you see how it's traded above it. We've come back, we found support at it again, right there. Now we're looking for a deeper run back into the range. That's the same thing we're looking for on a daily chart. And that's why it's a rinse and repeat, rinse and repeat. Don't make it too complicated. And look for common things like order blocks and breakers and that kind of thing. Above you, look at 50% of the range that you're in here now. All important levels. See how this little gap right here, we traded above it, and this candle right here trades back into it, right there, taps it, and now we're back up inside this range. So I'm looking for right here. On a 15-second chart, 2184. This is not a breaker. That did not take out an old high, so it's a mitigation block. So if we come back into consequent encroachment of, the mean threshold of that, which is what we hit here, and then go lower, we're looking for it to break through this level again, come back into it, give it a little tap, and then push the range, extend the range deeper. Same kind of things you're looking for on any other time frame, any other asset class. It's this simple pattern that repeats itself in the algorithm. And get that out of the way. Hans, look at this regular trading hour gap, he says. Darren, check it out. Ooh, are we rushing for an 8:30? Are we rushing for an 8:30? Fill of that, not 8:30, 9:30 fill of that. See how we traded through it? You love it. Right here, we've traded through it. We want and it extended the range automatically and ran all the way through the next range. That's bearish, man. That's much more aggressive bearishness. Now you're looking for this discount box down here. You've gone from premium or from discount here to premium. You create an inversion. Come all the way back down into discount. Run all the way back up to premium. Now we're running all the way back down to discount. So it's a boxing thing you're seeing here. If we trade through here, that level we just hit right there, 59. If we close below that, look for continuation on the downside. And we like this, see if we can refill this and see if we're coming lower. We've come all the way back up into that daily premium or daily discount recap, which is what you can imagine this being, is this right here. If we trade through it and come back into it, this will become the level that this is on a daily. And I'm looking for that to find support to go lower. So now these lower time frames, you get to see it happening a little faster. You don't have to wait a week or two before you see that thing happen. You get to see that kind of example happen on a 15-second chart and see how reliable that is as a method to evaluate price action. So you wait for a body to close below here and then trade into it. So we're literally sitting on it. Tell me that's not an area of sensitivity. You're literally sitting on the low of this inversion fair value right there. See how the bodies are just opening and closing on it? We've got a little wick down there. I like these little probes. I do. I call them little probes. I like that they little probe into there, right? You come back up. See how we're extended the range now? Usually you want to see it just pop below it, then come back into it and go lower before extending that range, but they're so close. It just ran the range right away. See how it run back into it right there? It's a quick whip back into that level. That's what we're looking for on the daily. That little tap back into that level. Remember we said we want to see it trade below it. It did. Whips back into it quickly, and we want to see that continue going lower and extending the range. Well, it's already extended the range, so if it's really aggressive now, we want to see it continue to drive through this low. That little imbalance there, and start pushing this range lower. Okay, so that's why I look for that particular setup to occur in the daily, hourly, weekly, whatever. Same kind of thing. So now if we get back through that again on a close, then we're back into getting above here. So we'd have to be above 2163, 21063. So we'd have to take out this high. That gives us a new reversal right here. Body gets above that and to find support above here, then we're looking for a run higher. Morning, Russell. How you doing this morning? We want to see this consequent encroachment of the regular trading hour gap to come back in and fill that. So you want to see this hold price. Jeepers creepers. I got too many people talking on that other channel here. I'm going to try and I'll close that window for now. Oh, well, I guess it doesn't make a difference. Let me just cut that. I love you guys, but I get so many mute notifications. Just for 3 days. We'll do that. Let's see if I can mute that. See how we found support inside here? I'm gonna keep coming lower. Nice. It's a nice. We're looking for a run back into the consequent encroachment here now. And a fill of this regular trading hour gap. So Hans, I hope you're killing this. There's a perfect little entry right there for a short. And Hans, you have to do me the honors of informing me when that regular trading hours gap fills in. I would like you to go, there you go, and it's filled, because it's like having a regular coffee. It's having your coffee in the morning. Hans reminds me about this regular trading hour gap filling. Morning, Kevin. How you doing, buddy? The liquidator. Oh, the liquidator has arrived. So we're back to old highs. We're back to this fair value gap over here. We're retapping that. I like that. Are we going to go higher from here? Watch this level. Here's our regular trading hour gap. That's a 15-second chart. Let's go to a 1-minute chart. So 15-second chart's giving you a change in direction, reversal, and looking for support off of here now. That was the perfect little tap of that level. Watch the body's traded above that. You're inside here, so I'd want to go long on that. From there, I'm going to move to break even real quick. Oops. Yeah, so that's a stress-free trade. Let her buck. Let her buck like hella buck. There you go. So there's a retap of this order block. I like that for long. And then we're looking for a run above these old highs here. Where am I looking? I guess your first level's right there. Would it just hit it? We're going to see if we can let this ride for a little bit here. Find support in here now. Now see, you got to be prepared to change your through the 830 again. You take a partial above there. We'll take a partial above here. Partial. And we should sell one right there. There. We took a partial above the high. And we are in profit still, so we'll let it ride. Let it ride. So as soon as I see this one, so my fail-safe is if I see it close below here, I'll close out the trade. Because I don't want to see the reverse happening here. So that's my fail-safe. Before it comes back to my stop loss. The wiggle room you can give it for a tap is right there. That's it. You're done. And you close below it. That's it. Now I move my stop loss right to here. So you have, I don't want to see it. I didn't want to see it come back down and tap that again. If it goes from here, then I'll wait for it to get back above that level. This is the order block. Should have left it just a tad bit lower. Usually put it one tick below that level, and that would have kept me in. But then you'd want to see, I want to see it accelerate through here. As of right now, we've just traded below it. We've come back inside it, tapped it, so it should come shorter. So that's the level you want to see taking your last bit of juice out of there, because if it runs through here, it's already coming back and tapping it again. I definitely don't like that idea. Now it would have come back and tapped me anyway, so I'm glad I got out. Sorry, you probably hear me slurping on my coffee here. So right now I've got a bearishness, and I have bullish support off these. This breaker right here takes out these lows. So the fact that we've eaten into it once, twice, and then we just kind of lingered in it, and we're not really accelerating through this level, I'm going to wait. This is where it starts getting kind of sloppy. If it starts to kick off of here and push through lower, my downside objective is that first regular trading hours or first fair value gap. If we can get through that on the downside, we're lighting up Hans again. I'm getting Hans excited about this fill of the regular trading hour gap. "33 people today. Welcome, all 33 of you. Look at that. Delicious and nutritious, my friends. Delicious and nutritious. Look at that. Pop. The fact that it was drilling in there, that's the kind of thing you want to say, it's not doing what I want it to do. I don't want to see this retap in it. Not a good thing, because now this becomes support. There's our discount array, and we're drilling into our regular trading hour gap. Or sorry, yes, we're drilling into that as well. But our discount array, so we've gone from box to box, that's boxing. Box to box, that's our boxing setup. And that would have been it. You would have been done. Short from there to there, you're out. Now, if we can get above here, watch this. We get above here, come back and reclaim this breaker right here. These last three candles that take out this little low right here. If we can come back and reclaim those, which should also bring us back into this inversion, come and give us a kiss. You're so close right now. Right there. Now you want to see that, just tap that and start heading north. We come back through it, but we're already through it already. So I'm looking lower. Let's see it retap this thing here. And our next price leg down below that. So as soon as we clear that level, 35 on a close, look for this whole level here. Again, the same kind of thing we're looking for on the daily chart, which is what we're in right now here. We're looking for this to break through, which is what it did on Friday. So we're imagining this is a Friday candle, and we're going to come back into this on a Monday, Tuesday, into this level, and I want to see it go shorter, right? Like that. This is Friday's candle. See that? And you want to see it come back in. Now, when you get a really deep one like that, you just want to see this low get tapped. That's it. Because typically what you'd see is, if you want to see range extension, you want to see this range extend lower than this, you want to see it just pop down in here, come back up, find support at that, then extend the range. When it's super strong and it rips through the bottom of that, takes that out and just keeps ripping right through the low, look for the low to get tapped and the breaker to get reaccessed to go lower. And in this case, it's not even doing that. It's just ripping right through the whole thing. So Hans, let me hear it, buddy. That's the consequent encroachment of the regular trading hour gap. Oh, we're so close. We are so close. Yes. There's the 6 a.m. We're through the 8:30, 6 a.m. We're right back into the midnight open range. We're just tapping the midnight open range now, just shy of that consequent encroachment of the regular trading hour gap. Good morning, Shepard. There's the consequent encroachment now, dusted. Now, do we turn around here now that we've done this first Judas swing of the morning? We've kind of given everybody the impression that we're going to keep going lower and then just turn on us and send us right back higher. I'd like for JP to be correct in his analysis of the week. If we get that upside taken. There it is. Nailed, dusted, done and done. 50%. There you go. And he's out. Good for you, Hans. Yes. Nice work, buddy. Good work. Now we're going to come back and fill the rest of it. Watch for the mean threshold to give way, so look for 75%. This is when you take this regular trading hour gap here and you project it out into the rest of the day. That's what you do. You take it like this, and then you go send it out for the rest of the day. I'm just going to call it a breaker. It's not really a breaker. It's not a breaker at all. I'm going to change the name of it. We'll call it regular trading hours. And we're going to send it out there. And you watch how many times a regular trading hours is re-hit. And then you take your fib tool, put your fib tool inside here, and put 25, 50, 75%. Just divide it into quarters and see how many times those levels get supported throughout the day. And how many times beginning of the week, this first Monday, how many times this level gets hit. Just project it out into the future and watch for yourself. You'll see, you'll be like, oh, there's more stuff I have to add to my chart. More. Derek, buddy, you're back. How you doing? You're pretty sick still, man. Not mentally on top of it with the flu and cold. Wow, that's a long time to have that, man. Sorry to hear that. Sorry to hear that, buddy. Is your wife any better? Or are you both down still? That's a long time to have a flu, man. Starve of fever, feet of cold. Yep. Starting the third week. Wow. Yeah, we've missed you, man. I sent you a little message on the Telegram there, hoping you and your wife are doing better, but sorry to hear that, Linda's. Oh, good. Your wife's the better half's done. At least the better half's feeling better. He's keeping you alive now. It's a trade-off. It's double teaming this flu. And down we go. Now we're looking for 75% and a fill of that regular trading hour gap. And then we want to see if we start getting back below these equal lows here. Take out these equal lows and this little fair value gap way down yonder on the Chattahoochee. We're looking for this little right there at 898. 898, folks. 898. Have you tried that euthanasia stuff? It's a Canadian product, so you better get it while you I know you can probably get it down there, but get it before the tariffs are too expensive to buy. Euthanasia is supposed to be really good for flus and that, but it's usually better if you take it before you even get a flu. I have this thing called Cold FX up here in Canada. Not that I'm trying to advertise their stuff, but they had some good results with their stuff as long as you took it before cold season or flu season. Wow, just cold, hey? Is it in your chest? Is it sitting pretty hard in your chest? Or are you getting it just in the sinuses? Chest colds are just the worst. They suck the life right out of you. So right now, if I'm looking at this level, I'm just kind of banging around between this premium and discount. There, we're dropping below it now. Quercetin with zinc, liposomal vitamin C. Yeah, you don't want to take zinc with a fever, man. Bacteria thrive on zinc and copper. Your zinc and copper stores, I think it's zinc and maybe it's not copper, but I know zinc is essential for um, bacteria or viruses to thrive on when you've got a fever. So when those levels, that's why your temperature goes up high, and then your thermostat, your hypothalamus in your brain, when your zinc levels drop and your environment becomes inhospitable for these little fellas, these germs and bugs and stuff, and they finally die off because they've run out of those essential elements to hold on to, then your thermostat resets, your fever breaks, and you're back. But I know zinc is one of the essential elements, so I'm not sure why you're feeding it with zinc, my friend. Achy cough. I'm taking zinc, vitamin C on daily supplements. Drinking plenty of water. Okay, good. Gotta drink lots of water, man. Okay, so we've got this rebalance. I like this. We took the high. We came back into this. A body. I like this candle support. Excellent candle support is here. Inversion. We've traded above it. We're back inside it. Going long again. Inside this range, looking for our regular trading, our first fair value gap. And then if we get on top of that, look for this premium array up above you here at 49 to 64. Jack up the vitamin C and D. Really? More than 1,000 IU units on the D and more than 500 milligrams of C. 500 milligrams of C? Yeah, you can do 1,000, but you might get the trots. Vitamin C gives you the trots if you end up taking too much of that. And that's the last thing you want to do is feel terrible and get the vitamin C trots. But that's a 1,000 milligrams. You could take 1,000 milligrams of vitamin C. 5,000 units of vitamin D, just daily needs. Yeah, I take 4 or 5 of those. Wow, 20 grams, 20,000 milligrams. Ouch, that's a lot. Check your vitamin Bible on, there's a thing called the vitamin Bible. 20,000 milligrams is a lot of vitamin C. And you can get toxic levels of vitamin C, by the way, just so you know. High dose vitamin C, there's been some interesting research done on high dose vitamin C. But anyway, this thing I used to read called the Vitamin Bible is, my Joe was back in the 80s, 70s, 80s? No, 80s or 90s. Anyway, check out your max levels of vitamin C. I think 10 to 20,000 is your like max levels. So now we've seen this big displacement back through this level, and we're still dropping lower. So looking for like a complete fill of that and run on this liquidity below the market here. Trade below it, come back inside it, keep coming lower. There's that immediate rebalance. See how the body trades below it, come back into the immediate rebalance, which is treated like a fair value gap, and then continue coming lower. So this here is the same kind of thing as the daily that we've been talking about, but an immediate rebalance. When you see that wick come back up and immediately rebalance that level, that's the same kind of setup that you have to use. So look for these as well as regular fair value gaps and that kind of thing. When I had cancer, I was taking 75K. Holy crap, that's how your body will use what it needs. So I'd say 5 to 10K per day. Wow, good for you. Well, congratulations on beating that sucker too. Congratulations, Chris. Good man. I know cancer hates oxygenated environments. They like anaerobic environments. So there's a lot of theories about whether or not you should take a oxygenated water, oxygenated drinks, any way to increase your O2 in the bloodstream, all that kind of stuff. Because they hate oxygenated environments, those cells. I have my holistic people only when sick. Go Disney. Woohoo. 25 days in a row. I don't think I have Disney on here. UNG, what have we got? Let's put Disney in the TSX dis. Don't diss Disney. Oh, yes, Greg. Yes, man. You go, buddy. 25 days of Disney. Look for 115, 117, and then look for those highs. Split that wick up. You get through 50% of that wick. Weakness is if that 25% of that wick holds and you start to see a sizable retracement. But if you can get through the 50% of the wick, then look for the high. Well, 75% then the high, but you know what I mean. Well done. Good for you, Craig. Look at that. So far, we're getting a reaction on the daily off of our level. That draw back into it and continue coming lower. So we'll see what 10 o'clock brings to the table. We're looking for that run on liquidity that we mentioned earlier over here. And so far you're getting it. Let me hear it, Hans. Let me hear it, buddy. That's a complete fill of the regular trading hour gap. Keto and fasting saved my life when I had cancer. Wow. That's interesting because keto creates like ketosis, right? Increases the acidity in your bloodstream. Very, very acidic environment. Hard on your kidneys, got to flush a lot. If you're on keto diets, you got to make sure you keep your kidneys and your liver well flushed. Lots and lots of water, man. 6 year keto for me with 5 water fasts under my belt over the years. Wow. I've never been a fan of water fasting. Your body needs fluids, it needs water, essential water. I've never really bought into that idea, but that's just me. I'm just an old broken paramedic. What do I know? I just pick you up if it goes wrong, I'll come get you. Well, you have a perfect blood panel. Nice. No sugar when you have cancer. Yep. Oh, water fast means you drink tons of water. Oh, I've heard people just they just go on like a complete fast and then what do they just go on well maybe it is a water fast. I thought I heard somebody saying they don't do anything. They just complete. But to me, if you're not flushing your lymphatic system, you've just got toxins building up all around your cells. Only water. Oh, okay. So water fast is not just it's just fasting and only drinking water. Okay, that makes sense. Water is the key to life. I agree, 100%. The interesting thing about if you're not flushing with lots of water, your cells. I'm going to give you guys a bio lesson here. Your cells are in what they call cellular respiration. So they take in oxygen, they release carbon dioxide and waste products, and the cells just release these wastes like they're just pooping all the time, right? So all these toxins kind of just sit on the outside of the cell, and then they get moved when you move. When your body, your lymphatic system, which bathes every cell of your system, every cell of your body, your lymphatic system is a blunt end system. It is not a pumping system. It only works when you move. So the lymphatic system bathes every cell. So when you move, you literally wash all that toxin away. It gets back into the lymphatic system, and then it's dumped into the right ventricle, and then you expel it in waste. It's filtered, and you get rid of the waste. So if you sit in a very stagnant position all the time, that lymphatic, you can get lymphedema. So it's just edema of your cells, and those toxic wastes don't get a chance to be moved. And those toxins can breed an anaerobic environment. They can change the mutation of the cell. The cell can mutate into cancer cells and various other nasty little things. So you got to keep moving, and you got to drink lots of water. It's essential, man. And it only works when you move. If your lymphatic system stopped completely, you'd be dead in 48 hours. You'd be dead, and your toxins would just, your cells wouldn't function in a toxic environment. That's why when you're doing CPR on somebody, when they're in cardiac arrest, all those cells are living in their own toxic waste. So you start CPR, you flush, you start to move all that fluid around, you start circulating, and you start to move some of that fluid, those wastes from around the cell, and it makes the cell more receptive to an electrical charge, so you can zap it, right? So you start to move. When you're pumping that heart muscle, you're getting a lot of acids and acidity building up there. When you're starting to do CPR, you move all those wastes from around the cell, and you can hopefully when we get there and shock it with a defibrillator, you guys have done some good CPR and we can help rejuvenate it. We give them some drugs to support that. That's way back in the day they used to give D5W Ringer's lactate. Remember the old rescue show? Started sodium bicarb with an IV D5W Ringer's lactate. Dixie, remember? I'm probably dating myself. Emergency with Johnny Gage and Roy DeSoto. Do you remember those guys? I follow the Fibonacci diet. If I weigh 161.8 or less, I can eat whatever I want. The Fibonacci diet, I love it. No crabs or sugar until I... That's awesome. Gotta love a Fibonacci diet. Look at this nice little dive through now. We've hit the key level, my friends. I want to see this ripping through all of this. And then we get back into that discount on the day that we're looking for. So I'm going to go back over here to a 1 minute chart. I have seen a recommendation of 4 liters per day worked best in keto, works best for you. Be careful. Hyponatremia, you hear a lot of people drinking tons and tons of water. Hyponatremia is serious, man. Your brain will swell. That will kill you if you drink too much water. Everybody loves these water flushes and stuff, but be careful how much water you drink. That it's not a standard. Everybody drinks gallons and gallons of water. You will die of hyponatremia. Look it up. Hyponatremia. That is a serious problem with people that obsess over drinking too much water. Too much of anything is a bad thing, even water, just so you know. And yes, I've seen people with hyponatremia. It is lethal. Your brain just swells, man. Check it out. Look it up. Be careful. It's like aspirin. Everybody thinks that aspirin is a benign drug. It is not. You have the kids that try to overdose on aspirin, or not aspirin, Tylenol. 150 milligrams per kilogram of Tylenol is lethal. So for me, that's about 30,000 milligrams. So it's like 30 or 60 pills or something like that. 60 extra strength Tylenols. If you're 1,000 milligrams, it's like 30 pills. That's lethal. Cytochrome P30, something like that. 130, 160, 180, something like that. It's a very toxic liver enzyme. It just destroys your liver. If you don't get acetylcysteine within the next 24 hours, there's nothing we can do for you. And those people who take Tylenol thinking they're just going to do one of those calls for help, I tell you, that's brutal. Destroys your liver. And then there's nothing they can do. They say, well, you're successful. You've offed yourself because you've killed your liver. Anyway, let's get on to something more happier note. Let's go to something like the markets. And I'm looking for this downside right here, right now. On the 1 hour, look for here. Let's see if we can get below that level. Or if we're just tapping this right now and we're starting to go higher. So just kind of keep your eyes on that stuff. Autophagy does to the body. I filmed my first Fair Valley Gap with tomahawk steaks. every day. I've seen some of those tomahawk steaks. Holy schmackers. I've seen on one of those cooking shows, this guy was making tomahawk steaks. I could not believe this. I thought, how could people possibly eat that much meat? There's just so much meat on those things. They're crazy. I'm not a big red meat eater. During the 24-hour fast, if only chug like a gallon of water at once, might it kill me? A gallon of water? I don't know the size of you. It's all relative to how much body weight you have, how well your liver functions. It's a whole bunch of things, Russell. Look, I doubt a gallon of water. That was at 4 liters. Yeah, I don't know. I'm not going to give out medical advice, but just be careful about how much water you drink. Too much water is dangerous. The 8 cups a day recommended is ridiculously unhealthy. Is that what you flush out? When you flush out the electrolytes? Well, you create you flush the proteins out of your bloodstream, and you end up absorbing water, and then it will just move. You supersaturate your body with lots and lots of water, and it will move into the brain, and then because there's a net diffusion gradient, which we could get too much into the medical side, but fluid ends up seeping into the brain, and then your brain swells, and you get hyponatremia. And it is absolutely lethal. So that doesn't mean don't drink water. That's people who obsessively drink way too much. And for each person, it varies, but it's a lot. I only pee a lot. I want to buy crude again lower. Too much water is only bad all at once. 1 hour current range went below equilibrium. It did. This good call, Derek. And we're back into this order block here, right? This little mitigation block on the hourly. See how this last up close candle did not take out this low, but this breaker right here that runs out, did it take out that high? Yes, it did. So that would be your breaker right here. You've returned back into the breaker. You've tapped the top of it. Now we're getting a reaction out of that. I like that. That may be the low, and we start to see this price starting to push higher now. So look for a reversal. So we got one right here. You got to get a body above that, come back into this range, and for me, you'd be much more bullish if we can get above a market structure break here. There's your premium array sitting above you, and there's your discount array. If you can get above it, come back and find support at it, go from discount to premium. That'll be my little entry here for a short little internal range liquidity hunt. So watch right here, right there. Yeah, marathon runners kill their electrolytes. They've done tests on marathon runners, and their heart and the toxicity your heart is exposed to is equivalent to somebody who's had a massive MI. but their heart's so good. Their collateral blood supply, I tell you, if you're a long distance runner, especially at an early age, you develop collateral blood circulation. It is one of those things that will come back and save you later. Exercise, exercise, increase collateral blood supply. And those marathon runners, they've got so much collateral blood supply because they increase the strength of their heart. They work the heart. It's a muscle, right? So you work it out, and it starts to grow extra blood vessels. That's called collateral blood supply. So when you have a blood vessel, one of your main, like a left anterior descending or something like that, the main blood vessel feeds the left side of your heart, that starts to block, which is typically what heart attacks will happen, is you get these little blocks that happen in there, the blood clots. If there's a collateral blood supply that is developed, blood will literally go and it will fill up that collateral blood supply and feed the area below where the infarction is. And I've seen that so many times in angiograms with patients who are transporting back to the hospital to get their angiogram. I had one guy one time, and he was, I think I scared the crap out of him more than anything else, but I said to him, holy crap. I said, look at your angiogram. And he didn't have, obviously, I didn't have a clue what he was looking at. But I'm like, you see that right there? That's a collateral blood supply. See your heart right there? Because it just gives you, the angiogram gives you a printout of each blood vessel inside your heart and what percentage of those blood vessels are filled with plaque and fat. And they'll say you've got a 70% occlusion here, you got a 50% occlusion here, you got 90% occlusion here, and he had 100% occlusion of one, 100% occlusion of another one, and the only thing that was holding the lower part of his heart together was this little tiny blood supply, this little collateral blood supply that was being fed into this area. I go, look at that thing there. That's the only thing keeping you alive right now. I said, holy crap, man. You are so lucky. They went in and put these stents in there, which is, they got to get past that plaque, rotor it out, whatever they got to do. They put these sometimes drug-eluting stents, which stops it from clotting and stuff. But those stents are game changers, man. Game changers. All they do, they take a saphenous vein out of your leg and then they graft it, and you get this, somebody's had a 4-level bypass or something like that. Yeah, your collateral blood supply can make or break some people later on in life. Because if you're not using it, they just kind of shrink down to do nothing. But when they're needed, they pop back up, they backfill. It's like enough pressure on them, they can backfill and save your life. Yeah, they're pretty interesting things. She's trying to kill me. Yeah, elderly people do not drink enough water. Here's a simple test you can do on your elderly folks. It's called a skin turgor test. You take their skin and you lift it up just gently. You don't pinch too hard. Lift up their skin and let go of it. And if your skin recoils and just goes back to a flat level in less than 2 seconds, that's good tissue fluids, like you good hydration of your tissues. But if you lift it up, like you look at elderly people, you lift up their skin and they just go, it takes forever to get back down. Those poor people need some fluids, and elderly people are notorious for not having enough fluids. So I always go to, when I see my parents, I just go, give their skin a little pinch. How you doing? You need to drink more water. Keep your water up. And they're always drinking water, so it's kind of good. But yeah, do the skin turgor test on your, that's how you check to see if your hydration level real quick is good. All right, Derek, you take it easy, buddy. Hope you get better soon, man. I don't like to hear Derek's not feeling well. I don't like anybody not feeling well. So where are we at now? We're at 10 o'clock, right? Looking for the silver bullet. You guys are looking for a silver bullet setup now. And now, see how we're kind of stuck between revisiting. So here's what we were talking about on the weekend. If this gap occurs and we go above it and come back through it, I want to see it used as a means to go lower. So we went above, we went through it, we came back, found support at it, went higher. Now we've ripped right through it, and I want to see if we do get a retracement into this. I'm looking at the new week opening gap right here that occurred this weekend on Sunday. That new week opening gap, if we tap that one more time and start coming lower, I want to see us accelerate like this candle here. I want to see it accelerate really quickly through that level and start taking out these lows and then using this as like a cam model 1 entry for continuation on the downside. That's a lot to look for the next hour, but right now you're stuck between, like Derek had mentioned, 50% of that range. So if we're going to get a retracement pump back up, look for this right here, that new week opening gap. It's key now. It's a linchpin for higher or lower prices inside here. So if we do come back, tap it, and take this low out again, I expect to see a quick acceleration through this this level of 659. Yeah, you want to see 50% of that giveaway. See how it's just coming back in, hitting it? 50% of that wick. You want to see that hold price, or if you're bullish, you want to see that hold price. But yeah, right now it's just we're looking at the wick. 50% of that wick is holding price right now. We're drilling into it multiple times, so you got to kind of look at it as this is like a drilling rig, and you just keep drilling it in until this main threshold gives way, and then we finally bust through and reach for more downside. Where's our oil doing? How's our oil doing right now? So we've gone into that premium level. We were talking about this morning, looking for the premium level to get hit. It hit the premium. We have a nice reaction off of it. We create another turn point, and we're coming into the discount. So you've gone from premium to discount, box to box trading in oil. So hopefully you got that one this morning. And this reversal here off the 930 open. Look at that, 930 creates our little drop below here and literally opens on it right there. That would have been your short, like a perfect short at 70.19. You guys have got to see these, man. They're even this one right here. See this reverse up here? We closed here, then we literally opened on the low, came back inside, created that little imbalance right there, tapped it, and then kept coming lower. So you say, oh, I'm going to wait for the next one to get broken cleanly. It does. That one opens, does the similar thing, just trades back into it, like right on the opening there, trades now below. So you want to see these lows get taken and used as support. They don't get supported. We look for this level right here. Do we trade through it? Right there, you trade through it. You think, great. Now, if we can come back into that level, which is what we're looking for again on the daily, back over there in NASDAQ, we're doing the same thing. We're looking for this kind of level here to get reacquired to go lower. And if it just keeps running lower, then you go, now we're looking for range extension already. It's already done range extension. So I'm looking for a retap of the low or the breaker that supports the run higher. So the low is right here. It runs through it, and all it does is come back, give you institutional order flow entry drill, and continues coming lower. You don't even get a retap of that. But if I pull back over here, you'll see it sitting right here. No, I don't think you even reached that one either. Is there another one back here? No. So we're looking for this little level right here now to get taken on the downside. I hate these trackpads. Okay, so there you go. It's taken on the downside. See how we come back inside it right there? So that little level we were talking about right there is the same thing we're looking for on the daily. Looking over here, remember that daily thing and that 15-second chart we were talking about before? We're over here on oil on a 1-minute chart doing the exact same thing. If we break premium to discount and we take the discount array out and we want to extend the range and we trade back into that SIBI and go lower, that's what we're looking for. And that's what we're looking for on the daily. So look over here. This is what was that level. We traded below it and we come back into it and then we extend our range and continue going lower. That's exactly the same thing we're looking for right here on the daily, just so you guys know what it is I'm looking for. Right here, this SIBI is a discount array inside this whole range. All of this range, it's the discount array. We've traded through it right here. We've traded back into it right there. And now I'm looking for a continuation on the downside. That's why I was calling for a short this week. And again, it's only going to continue going shorter if I have the lower time frames that continue to support that. And if they change, if it changes up on me, I'll see it on the lower time frames and say, all right, now I'm back into, do we still have support at this level? If we start to trade back through it on the other side, then I'm looking for a run deeper into this range. If not, I'm still going short. And all the time I have my lower time frames. Now I've got confirmation on my higher time frame. If I have lower time frame confirmations that continue to support that level, going lower, I will go lower, regardless of this SMT divergences and all that other stuff. I just look with where are we at right now, and that's my mindset until proven otherwise. And that's my otherwise on the daily, that is. Because if you're calling your direction on the daily, then you have to get your support on the daily. And that's my support long above here. It's my support short if I stay below it. Just wick into it like it's doing right now. I'm still bearish. But I'm willing to change my mind as soon as it changes up on me and alters that idea, which would be like right here on this new daily. You see how this right here, we've created this little SIBI on Friday and Thursday. And then Wednesday, there's a little SIBI here. We've traded back up inside it and also inside that daily. And we have not broken through on the upside. So this now becomes a little swing point. If we can get above it, find support at this and start pushing higher, get above that other daily SIBI inversion and start going higher. So right now it's just a fair value gap that we've just reclaimed, the fair value gap, or filled it. And now if you roll over it, that was a fair value gap fill and a continuation on the downside, which would support further downside prices. It changes. I start going a little more bullish if we close above here today, above 0.58 on a close. So there's our first little indication that we're changing inside this range, looking for this premium array above us again, internal range liquidity hunt, and then range extension, and we start looking at the next higher time frame to support that level. See how we traded above it and through it right there? Now you say this candle took out that level there on a close, but it also took out this candle on a close. So you got to go, if it takes out that candle and that one, you take the highest one. So it takes it out there, and this one comes back, taps it, and continues to take out there. So you pay yourself at the next high, move your stop loss to break even, because you don't want to see it come back down here. You want to see it continue pushing for the premium right now. So just sit and watch, see what we get from here. How about 50% only? This weekend we have seen ICT videos which are very much about wicks. Oh, I haven't seen any ICT videos this week. But those wicks are super important. I remember he never taught us wicks when we were in his mentorship back in 2016. And if you mentioned them, they were like in passing. You never really focused on them much, but they are huge. They do play a huge role. So here's you've traded above that high. You see this little fair value gap right here, this busy. Keep your eye on that. You want to see that as just a fair value gap. You don't want to see it turn into an inversion, because then it changes your idea about where we are. You're already back into 50% plus of this range. So you've already ran back up into a nice little order block here. You're getting a reverse above an old high. So now you want to see how you act in here. So I'm watching right here, and then I look for a run all the way back down into right here, 825 all the way to 834 if we get below that level on the close. So we come back here again and tap that level. Now you want to see it accelerate through here and start running for this premium array above you, because the next price leg has already begun. Has already begun. That puts us right into that 6 a.m. candle again. Where's Abs? Where's my buddy Abs? I haven't seen him. I always think of Abs as in the 6 a.m. candle. Ooh, Just keep your eye on that premium array there, and then look for the 6 a.m. candle above you. Let's go for a long right there. We'll buy a long. I know I'm a bit late. I'm a bit late to the party, but we'll take $1,000 out there. Oh, let's go for the 6 a.m. candle. I like that whole idea of the 6 a.m. candle. And the stop loss will go right below the mean threshold of this candle. I don't want to see it come any lower than that. You may accelerate your breath. Give a little kiss. So the strength occurs for me off these old levels underneath here. Oops. And this bearish candle here, it's high and it's open. I want to see this stay open, and I want to see that continue pushing higher. So as I start to lose those, I start to lose my love for the trade, and then you demand what you want of the market. Don't just sit there and go, oh, I hope. No. So if I lose that level right there, then I will close the trade out before it comes back and grabs me. And then if it continues going higher, I can say, okay, what did it reach for? Mean threshold. I'm just below the mean threshold of that candle, so that's the line in the sand. I like the fact that it just tapped the high there. That's good. Keep coming higher. That's more bullish for me. If I take out that high, I'll move to break even, and then zero stress. Because you know how stressful this is right now, right? And then if you get a lot of waffling around in here, I look at this level right here as a potential reversal, a structure break. So you're already anticipating a potential, if it turns against you, I don't want to see this get taken on the downside, come back into it, and then go short, taking out that. So that's another reason why I don't want to see this order block get taken. Now we just move to break even plus. It's probably a little close. There you go. That's the premium array there. Pay yourself. I've only got one, so we'll see if it reaches our upside objective. So we'll give ourselves a little more money. We'll reach that 6 a.m. box. A little late to the party, but whatever. Now I'm going to hug this up tight because we're into that premium array right there. I'm okay with that. If it stops there, rolls over and comes back down again, I don't want to give up any more profit. So that's internal range liquidity hunt. Done and dusted. You don't get the really box to box, but you do get the next array above that, which is this one here. So that's the one we should have taken. Took it a little late, but that's box to box. That's internal range liquidity. Now, if we pop back through this, look for the 6 a.m. and higher. If we don't, and that comes back down now, you'll be glad that you paid yourself at the premium array. Does that make sense? Did you guys get that? Thank you, Hadi. Thank you, my friend. It was a little late to the party, but as soon as you see that next price leg go, you think, oh, that's lovely. There's a nice next price leg, so yeah. But you got to do the Hadi, man. Be patient and pay yourself. Don't, even though I wanted to go for that, you got to pay yourself at the premium once. Otherwise, you can just get this tap through to the top, reverse, and come all the way back down. And you're like, oh, I gave up all my profits because I hung on to the idea that we're absolutely going to go for that 6 a.m. candle. And look how short we were, just a couple of handles short of hitting it, and it came back. And now we've got a threat of this being the reverse. I don't think it is. I think it'll keep going. But the threat is if we trade back through this, now all of a sudden I go, I've taken out that high. So you pay yourself at the high and pay yourself at the premium. But because I only had one handle, I was sucking that sucker up nice and tight behind it because I'm just chasing it now because I can't take any partials off. And I'm not willing to give up any profits. Because if you're just going into this banging around kind of dilemma here now, you might as well get paid and wait. If it does get back above that level, then use it for support to go through here and run for these equal highs above. You get back in sync again. Don't beat yourself up if it takes off. It'll give you another opportunity up here to get in to continue on. When you're bored, what do you think about a retraced level for Disney and retrace on WBA? Okay, Disney. Let's look at Disney. Rejection block. I'm always a big fan of pay yourself at the rejection block. Pay yourself at that very highest point. That's just me. You do your thing, but I like that. Take your wick here. You want to know what I'm going to retrace, what I want for the retracement, and draw that all the way out. 2550, and just use that in your quarters. Retracement. This is a beautiful little hourly right here in Disney. See how we come down, we run above it, come back down, give it a tap. No bodies get above here yet. Yeah, wicks do that. But if we get this candle that runs all the way through this and does not take out that one, always look to retrace back into this level. If this candle ran all the way through the top, look for this candle to provide support to go higher. It didn't. Body closed right on it, wicked above, came back in, hit your discount box inside this little range here. There's discount. You pull your fib tool on that, you'll see that's more than 50%. And yes, I love the little fib, Mr. Fibonacci here. Well, there's your 50%. Look at that, body's just nicely, just enough to wick into that discount and then continue pushing higher. You could also take the 50% of the range right there, from there to there. There's 50% consequent encroachment of the BISI. If you're into the BISI side of it versus the SIBI side, I like the SIBI, but the BISI is totally acceptable too. There's 50%. You hit the consequent encroachment of that and continue going higher. So for me, Craig, if we retrace back to, now that we've taken out this high, if you can retrace back into this high, you want to see a continuation to the upside. If this turns into a SIBI now, like, or BISI, if this turns into a BISI, and then we trade back through it, then I'd be looking for internal range liquidity hunt. I'd be aiming for back down here, because this lower portion has not been filled yet. So I'd be gunning for the lower portion of that. And if you trade back through it, wait for a deeper discount, back through here, back through here, back through here, and then the relative equal lows below you. So there's like a graded level of this thing retracing, but you'd have to see the first indication of a retracement is to see if there's a BISI that gets broken to the downside. Look at the range that you're in, look for 50% and decide whether or not that 50% is a level that provides support to go higher, where your fail safe's going to be for going higher. And if it fails before your stop loss gets taken, then just wait for the downside, because you only buy this, you don't short it, right? So yeah, that's still bullish. All the time that's doing that right now, it's still bullish for me. You have to get down to a 15-minute chart. 15-minute Disney. See how we traded above that level right here. You come back into it right here. See how we traded through 1 and 2. Close above it. This one is the second one. Use one you take. You go long here. You're above this level right here. Support, extend the range. It reverses right there, comes back, gives a little kiss right there, and continues going deeper into this range to your discount box again. You hit discount box, and when it trades back above this level again on the upside, you look for more upside. Trades above it, comes back, gives it a little kiss right here, and then you continue into the upside. It's the same thing every day, you guys. Every asset class, every time frame. We're on a 15-minute chart in Disney now, and you're seeing the same thing. I tell you, look for the simple setup, and trust it. Check it out, man. And then when you mix that with time and day and TIBS, the TIBS program I showed you guys, you're starting to find some magic entry time. You could narrow it down to specific minutes and time for these entries. So I didn't really answer your question, did I? Wait for this BISI to form here, and then look for graded levels to get taken on the downside, or support levels to go higher. If you want to keep buying higher, look for 50% of this range. You want this to be your buy right here, and you do not want to see it break through that on the downside. Otherwise, it's going to go lower. So one tick below that low. If it comes back into that level to go higher from here. If it starts to eat through that level, that mean threshold, that candle, I start to lose my love for it before it hits my stop loss. Anyway, that's how I look at it. For what that's worth, Craig. Not that you're taking any financial advice. It's just kind of how I'm looking at that chart. So look at that 1 minute chart. See how we broke through that level right now? Broke through it on the downside. We came back up inside it, short right there. Now you're inside this range. Pull your fib tool on that whole range and say, where am I sitting? You're probably sitting at 62% on that whole range right there. From low to high. Your fib retracement tool, bingo, 62% right there. 62% retracement. So look, for now we've got this little reverse right here. Now you've taken out that low, reverse, and where's the upside? Right here. We're just hitting it right now. That's boxing from premium. Now you want to see that hold, that roll over here, hit this, trade through it, come back into it, and then extend the range. And where are we going to extend the range to? Back to that little box we're talking about, way back down yonder. And this guy here. So watch how that level right there, which we just hit it, response. If we can get back through this level on a close, support, then I'm looking for a run back down deeper. Shorting Disney is a bad word here. It's a bad word. Okay. Yeah, my father-in-law's big into Disney. He's traded that tons of times. I should do a Disney trade with you one day, Craig. Then we can spend more time focusing on it. So we come back all the way inside that level. And now if we're kicking off of it, you want to see this level give way on the top. Find support at that. And then we want to see the next price leg higher. Aren't you glad that we took out at that level now? You pay yourself at that level. Even though we were aiming for the 6 o'clock and you saw me move my take profit to there, but you got to pay yourself in there. And if you start seeing it do something you don't want to see it do, you get out of the trade because there it is, trades below it, comes back into it for a short inside that range. You take your long off, put a short on 50%, pay yourself. If it comes back, creates this fair value gap, trades through it. You go, I'm out of that long trade, short trade now. I'll go long right there. So you can go long, short, long. Takes that out, continue to find or pay yourself at the premium inside this range, and you're out there. If it trades above it, get back into it, then you go long and continue your next price leg higher. If it rolls back through here, look for a trade below, and then run back into this discount box. So those are I just gave you two different directions right there and two different levels. So now watch to see it, which one provides support. See how you pop into that premium array? So that discount, box to box, that's boxing. You box, box. How many rounds of boxing can we get into here? You go high, we come back to low. Go high, come back to low. Go high, back to low. Then you've got that consolidation that starts to happen, usually seen around lunchtime, is you're boxing back and forth, and you can have 8, 10 rounds of boxing going 1, 2, 3, 4, 5. Keep going back and forth between the premium and discount arrays inside the internal range liquidity. But the moment they bust through that and you see a nice displacement candle above or below, we think, great, now we're going to see range extension, comes back, taps it, range extension, and you would hope to see it take off from there. So I'm looking at this level to start the next price leg higher right there. And we do it on a close, not a wick. And I'll take the trade if it comes back there. So we'll watch this the next 30 seconds to see where it trades. I like the fact that we've already probed through it once, and we're probing through it a second time. Mean threshold sitting right here of that candle, and we're tapping it. We're dippy tapping it, and this is the midnight open candle. And this is the midnight or the first fair value gap of the day at midnight. There. Now if it comes back in, gives it a little kiss, we'll take that for a long. If it taps the midnight open candle again, I'll take a long there. I'll even put a buy order in there. The stop loss will go just below here. I don't want to see it come. That's my stop loss. Doesn't mean that's where that's just a catastrophic kind of rip back and take me out type of thing. I do not, obviously, clearly do not want to see it get back down there because I don't want to see it get back below here on a close. So if I don't get the entry, I don't get the entry. I wait for this level here to get taken to the upside. This would be better if it just turned around now here. Before extending the range, come back and give this a little kiss here first before extending the range. So come on back here. Who's got a Roger Rabbit girl? They can tempt it. Oh, that's what we need. We just need to tempt it back here with a little carrot. That's what you need. Come get you some carrot. It smells the carrot. It smells the carrot, you guys. Come back and give us a little kiss right off the minute open. That's the tap right there of the first fair value gap at midnight. Come into the carrot. There you go. Now you just want to see it give that midnight open candle. There you go. Now I'm in. Now I want to set the carrot up yonder. Yeah, I don't want to see that. You don't want to see a ball wick get through here. If this is going from premium, see how this premium right here? We did not really take out a high though. So coming back inside this range here is 50%, 62%. Don't sweat it. Think, what could it come back to? Oops. 50% is right here. 62% brings us right back into the discount array. So I got to give it all that room. There's the tap on it one more time. If it eats through it, it's going to get me, and it just paid new information to get back in sync with the different direction. So I got to allow for this retracement back into here. Did not get that little response I wanted. So now this stop loss says, I want to come right up to there. I do not want to see it come back down here again. It's tapped this. It's done its thing. Now I want to get either take my trade off here because I'm on the wrong side of this. So if it comes back through the opening of this candle again now, I'm out. So my fail-safe is saying if it's just coming back in to tap this old level right here again, now that I've traded back through it, find support at it and come lower, I'm expecting this to get taken now. So I'm just trailing my stop loss up, trying to offset any losses that I've got here. So I'm just trying to chase this down now to make sure that if it does come back and tap me out, I'm going to take less than the 900 I was going to take earlier. Right there. So now you wait. I've got this one and this one. I'm in a discount portion. And if I trade through this on the downside, then I'll get back in sync with it coming lower. If it trades back through that level, you can get back in sync with it going higher. And you just paid some new information because it broke that level here on the downside, and you're just chasing it back now to try to offset your losses before it comes back and takes you out. So that's just it. We just found that we're on the wrong side of it. That's all right. It did what we didn't want it to do, and now we're just trying to quickly grab some money back before. If we would have left it, realizing we're on the wrong side of it, you have to recognize you're on the wrong side of it right there. When you see that close through it, you go, oh, what could it come back to? Yeah, okay, could tap that. That's all you get. So then you start pulling your stop loss up because now I'm on the wrong side. The rule is if you're on the wrong side, cut your losses. This is cutting your losses as quick as you can. You're hoping that it would come back and give it one more little tap so you could offset. You can get short or break even or whatever. So that's what this was. You saw me coming back in here trying to offset my the loss. Now we traded through this side on the downside. So now you want to see this range extension come back inside that, give it a little tap, and I'll go short there. Right there. I'll go short there. Stop loss will go above that candle there. Now all I want to do is make back my $600. So I'm just going to look for this old low down here. Now if we trade back through this level, I'm on the wrong side of this again and we're coming back higher. So watch there. I don't even like the fact that we wicked into there. You get the mean threshold, that's it. You better start coming down or I'm going to be a little disappointed in you. So now my stop loss will go here. I do not want to see it go back through the mean threshold of that candle. As soon as it takes out that low, I'll move to break even. That little swing point there. So if you see it starting to come, like I don't even like seeing that wick come up there like that. That's probably going to take me out now. I don't even want to, this low right here, that's all you get next. And then you can come up one more time and tap the low of it if you want. But that's it. I don't want to see any more than that. As soon as that comes back down, starts a bearish candle again, I'll move my stop to here because I don't want to see that come through there again now. I know I'm just playing with, it's going to get, it got me. We're back through this level. So now you're looking for this level to provide support to tap lower. Now I'm not going to keep getting bashed around inside here, so I'm going to wait for that level above me to get taken or a breaking structure to the upside to continue going. Otherwise you can just keep getting beat up, chasing, I'm on the wrong side of it, downside. Now you're on the wrong side of it, upside, wrong side, upside, downside. And I've got smaller ranges here not to be able to make a return on. So you're paying for new information, that's all. So it just came all the way back to the mean threshold again of this candle. And now you got to say to yourself, did I move my stop loss too soon? And the moment you get above it, you got to say, nope, I'm not going to tolerate that. Otherwise, that's that whole thing that Russell talks about. You start to become inflexible with, or start to become flexible with your rules. And as soon as you become flexible with your rules, you put yourself at risk of getting taken out, which would have been another take right there. So I'm good that the rule was if I trade above it, I'm on the wrong side of it, move to the sidelines. And if it turns around and goes back down, I'm not playing that whole woulda, coulda, shoulda, woulda stuff. That was the rule. Traded above it, I'm out. I'm on the wrong side, so wait for a market structure break now. Otherwise, you're just going to get beat up in consolidation, higher resistance stuff. And don't worry about the fact that, what was it, 500 or that's like $1,100 in loss right there. We made a bit this morning and then we gave it back right there. So wait for this upside to get taken now. It told us that we want to go up, but again, you're not just going to keep taking losses. That turned around now and came back down below you, you'd be like, I took another loss. So you wait for a structure break. Otherwise, you just got discount premium boxing around inside here. Aim for the carrot. Come for the carrot. The carrot we should put right here. That's internal range. Eating carrots. Well, you just saw me take a couple of losses, but that's based on a very specific set of rules. around inversions and where I am internal range liquidity. And don't beat yourself up over a couple of losses like that. Insignificant, man. You just paste some new information and say, I'm on the wrong side. Oh, I'm on the wrong side twice. I'm out. I'm going to wait for this structure break. Get out of here. And don't say, oh, look, I was right on the last. I would have taken it one more time. No, that it could have, should have, would have, if stuff is just, that's just beating yourself up emotionally. You don't need that. But you're just looking for a continual confirmation now to see if that little fair value gap there holds price and we go higher, or if it rolls over and comes back down, you'll be glad that you didn't try to go for the premium array again. Otherwise, it's coming back to beat you up a third time, once, twice, three times. It's coming back to beat you up, and you're like, ugh, that's gambling. When you keep wanting to put another nickel in the jar, the machine, and pull the one-arm bandit saying, this time it's going to go short. Oh, this time it's going to go long. Oh, this time it's going to go short, because you keep bouncing around off that discount array. Wait for range extension. No, it's too close to try and grab much profit out of it anyway. That worked for me. Eating carrots helped me learn how to trade indices. Yeah. So if it gets back through that level again, which it is right now, you're looking for a short. You're looking for it to, not looking for a short, you're just looking for it to go shorter, extend this range. Stay on the horse, man. It's spinning around trying to throw you off right now. Stay on the horse. And this is where this would be no different than staring at a one-day chart in a consolidated market over a few weeks. If you're picking today, this was your only indice that you're looking to trade, you'd be like, oh, this market's crap right now. If we can come back and find support off of here today, I'd like to go short off of that. See if it was an up candle and it opened up and went to here, you go, great, now I want to see it short. And now you get a nice short. We have range extension. That's what you'd be aiming for the day. Your trade's done for the day. So we're calling it short from here, and it's just gone short. It's extended the range. So yay, one worked. The other one didn't. This one here, internal range liquidity, there's 50%. It reversed on 50%. Came back down again. Took out that low. Came back, found some support at it, and now we're looking for a continuation on the downside. Look for structure breaks now. First one, second one, then you're looking for a deeper run down into the lower range. That's how you kind of stay on that horse. You find those inversions and see how they provide and where they are inside the range and where they provide support and where they don't, and what breakers behind them, what fair value gaps behind them, what imbalances behind them, what premium or discount is up above it or below it. That's all I look for. See how we traded below that level on a close? Then we came back in, we tapped it right there. Now you want to see that continue coming lower. And you want to see it accelerate through here now. I want to see it start to really get some speed here. So I'm going to sell short there. I know I'm a little late to the party, but I'd like to see that come down for these lows now. You have to be above that level right there. We could see a nice run. If it runs back up into there one more time, I'll take another short there. I'll add another one on. Just ranging in the middle of the regular trading hour gap. Good Lord, I've gone from 1400 down to up 200. I'm out. LOL. Good for you, Chris. Look for a long crude trade. and the puke stopped out green. I'm very satisfied with the day, a long and a short, as well as 2 trades in the DAX this morning. Excellent. Good for you, Hans. Well done, my friend. Well done. Let's get it started in here. I'm really deep in this discount. I'm looking for a deeper discount. See what I did there? Should have waited for a premium to sell at a discount, not a discount to sell at a deeper discount. Impatience. It still haunts me, the impatience. Now this all goes to crap. If we get back above that level again and take out this order block, then we go back for these equal highs, and I just got beat up again. That's when you move to the sidelines, you lick your wounds and say, look, see how this reverse is happening here? Be careful of this. You could be on the wrong side of this. Right there. You want to trade below it. Don't trade above it. Look at that. Literally opened on it. Oh, I'm on the wrong side of that son of a beehive again. So that's my last retracement back into here for the short. I said I'd get short there, but there's a reversal here. So now it's giving me some conflict. So now that level, if that's the line in the sand for me. If we lose that level in this breaker, then it's going to come get me. If that had not formed, I could have taken that short, another short there. We'll see how this pans out. Dave Barry, how you doing? I've watched you on and off for about a year now. I'm to the point where I follow my rules. I make lots of money. If I don't, it costs me money. So I follow my rules about 80% of the time. About 80% of the time. And is that about 80% of a win rate right now then, Chris? So here's the rule. If I trade above it on a close and it's literally on it right now. So I don't like the double probe, but we still have this level right here. So I have to let this run. If I take another hit, that'll be all the profits that I made today given back. So I'm stuck between 2 rules here, support and change in direction. So it's change in direction to find support to roll over and come back down again. Eek. Hence the reason why, look at this, I bought a discount and I should have been buying a premium and selling it at a discount instead of a discount. I'm about to take a bath on it if that comes back against me. See, now we've traded above it. I gotta close that out. I gotta close that out. It's traded above me here now. That's the rule. Now if it just taps this and goes all the way back through and through this level, that's the punishment you get for buying a discount, coming back into a premium. If it rolls over now and goes lower, late to the party doesn't work, man. Wait for the trade to come to you. So here's the upside. 911. How ironic is that? 911. Look for that level to 919. So that's good. You get to see the mistakes you can make as well, right? As the if it trades back through there again, that return back into, it didn't quite hit that level. Trades back through that, find support at this. Now look for a run back down below that low. Thank you for doing this every day for all of us who have learned from you. You are a gift to all of us. I bounce between 77 and 84% win rate. All good for you, Chris. Now, if you change your 100% rule to a 100% rule, you could probably bump that up to in the 90s, right? So yeah, great. I'm glad you guys are picking something up, and I want you to pick up some of the stupid trades I'm taking here as well, so you get to learn a little bit about. Even though I'm talking myself, I did a stupid thing like, oh, I'm just going to come late to the party and take this. No, no, no. Late to the party is not a rule, but you can see how you can try and offset a loss there, and where you go wrong, where it doesn't, like these levels, you go, oh, I'm on the wrong side of this. The moment I go above that, I'm on the wrong side. So forget your stop loss. It's probably going to run for you anyway. So that's the fail safe right there. So if it comes up to that level and trades through it, I'm going to be happy that my fail safe, the rule is the fail safe saved you deeper humiliation in front of your people, your friends here. It saved you a deeper humiliation than the full 1500 you would have taken, because you saw this fail safe. Had you waited for that level first, then took the very high of it or the bottom of it and said, now if it trades through me on a close and comes back, I can break even instead of taking that $700 hit you just took there. You could get a break even and it can continue up into a premium array above you. But you did the little, oh, I'm late to the party bullshit, right? And fail safe saved my butt there, because I'll be right back into my, we're already digging into that premium level. I just wanted to see it get hit, turn over, and come back down right there, right inside that box. So if you're short right there and it comes back to that level, move your stop loss to break even and wait. And you want to see if it gets through here. That's the retracement I should have been waiting for instead of late to the party. So that's analyzing where I went wrong on that trade. See, it came back in there. Pay yourself at that level. Your break even, zero stress on this trade. You paid yourself a little portion at that array there, because you're between here and here right now. There's nothing above you inside this range except this. So if you're short there, pay yourself there and wait, move your break even, and now wait to see where, if we get back through this level right here at 883. Amazing how much running through the week's price action over a weekend improves your ability to see predict price action. It is so true, Chris. If you practice on the weekends, that whole thing I showed you earlier about, you see this candle, create your sticks, put your sticks up there, and then move it one tick at a time and say, if I was making my decision now, where would it be? What would it do? What direction would I be aiming for? Make your decision at the end of the candle, and then you go, what's my next decision? End of that candle. Not while it's forming. Make your decision now. If you practice on the weekends to make decisions at the end of the candle, then you can decide next decision, the end of that, where am I inside this range? Where am I, am I in a premium or a discount? What kind of premium range am I aiming for? Where am I going to find support off of that? My next candle, bang. And you just keep adding your candles to it to see where you are inside the range. If I was entered in here, or I was entered off of that thing there, I get my 50%, I'd pay myself there. Develop your rules inside those things, and then just click the next candle to confirm the next candle, next candle, next candle, and just keep doing it that way. That's how I practiced on the weekends anyway. So see how we're above this one? We found support at it. We've taken out that low. You see this reversal. We saw that when we wanted to go short. And you went, ugh, dummy. Look at this guy right here. Right body's totally respecting it still. And I got long or short right there, or down here somewhere. Silly, 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 silly. So take it out of low. You get your reversal. Trade back into it. Now you want to see this level here get taken to the upside on a close, and then take out that candle right there. then you're looking for this last little piece up here back in the Monday's open range. It is definitely the hardest part. Trading has very little to do with a very minimal amount looking at charts. The majority of the trouble you will have is developing rules around your own impulsivity. Saying things like, oh, I'm late to the party, but I think I'll take it anyway. That kind of shit is not a rule. The most frustrating part is when you mark your levels, your analysis is solid, but then you spot something, change plans without knowing why, stop out, and price rockets straight to your level. So true, Max. So true, man. So true. So you have to say to yourself, when it takes you out, what was it? Was there a specific level or was it manipulation? Like I understand manipulation times, it'll wake up and take you out and you go, oh, why did it take me out there? And then you look back at the range, you go, oh, okay, it retraced to 62% of the range. Do I need to adjust how I look at that? So don't look at it as you get beat up, but look and say, why did that take me out there? Okay, that's the level I'm looking at here. As soon as it went through it, oh, okay, yeah, that's going to take me out because I'm definitely on the wrong side of this now. It's showing me that it wants to go higher, and it's going to find support off of levels to continue pushing higher. If the wick comes back and takes you out, look at exactly, and then start to pull your chart, pull the range and say, what part of the range did that retrace back into? Is it overlapping an old premium array? Did I not see this one back here? That's why it came back and got me. If I would have been above that, I would have been fine. I've got to be more diligent about my inversions over here. Cut through candles. Where's my inversion? That's a premium array inside that smaller range. So yeah, I've got to go back over and watch that. Sometimes, Max, you'll find that that's the thing that you slipped up on, is you missed something deeper inside the range on a premium level, that you're sitting too close to it and it came back and took you out and then rocketed to the direction you wanted it to go, only because you didn't get a good eye on where your stop loss should have been, or your fail safe. Stop loss there, fail safe, like just above that level, right? Because you don't want to see it wick through it. You want to see it tap it and get out of there. Demand of price action what you are willing for it to do or see. See how now we're back through this level again? Wick. High resistance. Welcome to high resistance. So when you see high resistance, should you be trading this? No. Just practice it. Just say that's the level I'm looking for now. It has to break above or below that, and then it has to get above that level, or that candle there, or this mitigation block right here. The breaker or the mitigation? Who's the strongest? Breakers are usually stronger than mitigations. This one's got a SIBI right above it. It just keeps coming back and reclaiming the SIBI over and over and over. We bought it. Oh, sorry, is there an inversion now? Because we came back from this side. That's a fair value gap SIBI. We went through it. Now we're reclaiming it from above as an inversion to go higher. And if we trade through it on a body, then we're looking for an inversion on the downside, and we're looking for this mitigation block to give way. Did it come back and tap that again? Look at that. See that level, the body, now the wick. Watch up here. This little guy up here. That first fair value gap after midnight. That's that first one here. That's the first fair value gap after midnight. And we have the midnight open. We have the midnight open range. We have the 4 a.m. candle. All these are overlapping arrays. So there's some drawn liquidity above you here in terms of key levels. So watch those. This level here has now been traded above. We've come back inside the mean threshold of it. You want to see that continue extending, and then you want to see the same thing happen to this candle right here, and then reach for that little spot. And if we can get above that, look for range extension higher, above these relative equal highs, and then start running back here. And we're getting into 11 o'clock, so 11 o'clock, usually your first fair value gap after 11 o'clock, trade back into it. You want to go long. If you're new to our channel, you're welcome to pop in anytime. We're happy to have you. If you have thoughts you don't agree with us, I'm all for learning something new. So if you can share something that that you see that's different, or you don't agree with the analysis, you need more explanation, just ask. I'll be more than happy to re-explain any narrative that I have, and I can change. As you know, I'll change my narrative over and over again, not because I'm just being fickle, but because I see something happening in price that changes that opinion. And you got to be willing to change your mind. If you marry an idea that said has to go there, and if you're marrying an idea on a higher time frame, stay on that higher time frame. Because if you hear me say, if you're thinking it's going to go higher, and I'm going, oh, it's going lower, it may be just going lower inside that 15-minute candle you're looking at there. So I may contradict with something that you're looking at on a higher time frame. So make sure you get on the same time frame that I'm on, wherever my analysis is. Make sure it's on the same level if it contradicts yours, because you may be right. That may be where we're headed on a 15-minute chart, but presently on a 1-minute chart, that's not where it's going. So it's not that you're wrong. I'm just on a different time frame, that's all. So if you're new to our channel and you want to pop in, subscribe, we're happy to have you. More people the merrier. Come one, come all. We're just here to show you how to watch price action and take a couple of trades. I'm going to start taking a few more trades in front of you guys to show the ideas. But I want you to study price. I don't want you to copy my trades. I want you to, as you can see, sometimes I'll make the wrong one. But I also want to show you how to get out of that trade if you are wrong. See how we were short? I was short here. I saw this. It's like I'm on the wrong side. Get out of my trade multiple times. Then I was starting to climb back up to where the stop loss was originally. We just wanted to see a body get up into here, turn around, and go back down. See how the body is now closing above that level right there? That's not what we want to see if you want to go short. Comes back down. Now if we start to run back higher, that's the level we're looking for. So I'm stuck between the discount array and the premium array inside this internal range of liquidity, and that's all I'm stuck in right now. You can't do anything until it breaks that inversion or this inversion. So 29 or 29.64 and 28.83. That's the high and the low. You want to see range extend, it needs to close above or below those levels. Anybody have any questions? If you like what we're doing, hit the like button. I would appreciate it. I do appreciate you let me know if it's something, the narrative kind of works for you. You understand what it is I'm kind of talking through. There's 38 people in here, so it'd be nice to get 38 likes at least. 38. These people with thousands and thousands of people in there channel. I'm just happy for 38 likes. So rejection block right here. Keep your eye on the top of this box. The Monday's open. Midnight first fair value gap. Keep your eye on that first fair value gap there. That's this one. That Monday, it says Monday on it. There's a midnight open. Price point. And it's right on a 21 candle. Bingo. There you go. There's the top of it. That's inside that premium array we're looking for. Now I want to see if we can get above that. Watch for support right there at 964. Right there. So it's 964, 962, 962, and then continuation through the mean threshold. Let's see if we find some support here. Before we take out that high, you want to come back, give this a little kiss, and then you want to see range extension. Got to get a body above here, so it's got to close above that, 964. Right there, good. Now come back and give a little tap right into this level at 964. And I'll take a long right there. So watch here. We're not getting the 964 just yet, but we could get a retracement right back into these old highs here. So if you're looking for a discount, you want a discount range down here. I just wanted to see 964 get hit. Look how close we were, 96575. Now the range is extended, so I don't get the range extension. I was waiting for one more tick to come in there and grab me so I could catch a little quick run to that level there. It didn't give it to you. It did break the high, so it told us it was going to go for a range extension. We missed it by 1.75 ticks right there. And then it just popped up above that level there. So now if it runs back into this range, you want to see a body get through there, not just a wick. A wick is just like a quick stop run. So now I'm looking for a deeper discount. And if it reverses now, you look for all these places where you could, is there a high taken? Where's the first fair value gap? Busy on this side. If we trade through it, we're coming back into the range. What's sitting back inside that range that I could aim for? See you later there, Craig. I think I'm almost done too. I've been here for 3 hours this morning, or 2.5 hours this morning already. So just coming up for 3. I think we started around 6:30 this morning, Canada time. Wait for it. Wait for it. See how we're trading through that level? We'd already taken that range. So this is where you got to be real careful, because if the range extends before you catch that little tippy tap that we were looking for right there, then you can get this kind of thing, this retracement back through. Just a little swing above like that. Looking for that opportunity. See how it's traded through here now? I'm not touching this. So looking for discount array way back in here. Looking for 892. We have this guy right here as well. And this breaker. We've traded right back inside that breaker. So now I want to see if we get back through this level on the upside and then continue to extend above these equal highs above you here. Otherwise, this is just another internal range liquidity hunt back to these this breaker right here. We come back, tap it. You want to see it accelerate through here and go higher now. Get back through this level. Darren, you've been locked in that basement all morning. Yeah, they send me coffee down and throw a sandwich down the stairs. And then, yeah, we don't have to worry about going out with our parents for at least another 10 hours or something like that now. We're not going out to taking them out for dinner tonight for a celebration. I got a few more minutes. My iPad's almost dead anyway, so. Fair value gap. This is SIBI. See how we just jumped back into it? That's an institutional order flow entry drill. Tap and come lower. So watch this little level down here again. So breaker, now it's getting drilled into, right? It wasn't just a quick tap and then go. You wanted to see it tap and leave. Creates a SIBI. You get an institutional order flow entry drill, and now it's drilling through it again. So now I'm looking right here for my discount tap. And you want to see it accelerate through here. I want to see a big candle go pop through here real quick. Ask and you shall receive, my friends. You shall receive. And a commercial pops up. Wealth management. Right at a key time, wealth management commercial pops up. Keep your passwords with Google. All right, well, there you go. I tapped it. Discount box is hit. Now you want to see if it goes through that box, find support at it, and aim for that next box below. The camera view could be a movie. Help me, I'm stuck in the basement. Anybody's out there? Send the cops. I'll wave. I'll stick my hand out the window. Let them know I'm here. All right. There's your discount box. Now, how do we act inside the box? So you don't really get box to box trading here, but you do get institutional order flow entry drill. We talked about that. For a quick run to discount box, you've hit the discount box now. From there, that perfect entry at 39, all the way down in here at, let's say, 89, you would have had 50 handles right there. Just in that quick little run. 50 handles. I'm sure you guys like 50 handles. Now, if it leaves, remember, we never got an opportunity to get in here. So if you see this retrace now, look for this upside objective right here. So I'll be right back to the bottom of the midnight open range, and it coincides with the perfect premium array inside this internal range liquidity. If this here now holds price and we start to run back through and hit a level that we haven't been able to get a hold of, look at that. Say, I'd like to see it reach up into here one more time before coming lower, because that array was not given to us as an option just yet. The only thing they gave us was the institutional order flow entry drill for continuation for our run to our discount. Now, are we going to give it? They're going to give us an opportunity now that it's lunch hour to go back into this bouncing around crap to run back up into our premium array, or is it going to give us a pop down below this back into our next discount array, which is here? If we can get through that, then we're back in sync with running lower for these equal lows below us and the carrot. Right now, I do like the idea of us coming back up here. I don't know why, but I do like the idea of us reaching for that. There's a gap in micro, but not in mini on the 15-minute. Yeah, that 15-minute one. So we've traded back below it, and we're coming back inside it. You don't want to see another body get above that. You want to see that just continue coming lower. If it starts to run back through this, you want to see if it's just going to wick up into there. That'll give you your wick into that premium array we're looking for, and then start rolling over. And again, you got to get below, stay below this level. Wicks in there are fine. If you want to see a body get below you, you want to see this range extend on a 15-minute chart. Nope. It's potentially, we'll wait for the candle to finish, make your decision at the close of the candle, not while it's forming. Too many people chase the candle. You see that big bearish candle, you think, oh, it's definitely going lower now. No, wait for the candle to finish painting. Make your decision like you would if you were just waiting for this practice. You're practicing on the weekends. You practice at the end of it, not during the candle's formation. I'm going to go through a couple more of these and then I'm out of here. And then we'll have another little chat about where we think price is going to go at the conclusion of today's charts. Looking for upside. That's good. We'll watch where that closes today. Looking for higher prices. I like that. Euro's going. What's this guy doing? Oil. mean threshold on the daily, the hourly. We've hit the premium array, the discount array. There's your boxing for the day, done and dusted. How beautiful is that? You have a reverse right here, body trades above it. You get a perfect entry here for a long, running for the premium array. You hit a perfect entry for an exit. It comes back down, creates the reversal. You don't get a chance to get in on it, and meanwhile, now you're into your discount array. So you didn't get a chance to catch any reverse back into here, but it is discount to premium, box to box, done. 2 hours, 3 hours, you could have been in that trade and cleaned house. Here's your next reversal inside this hour. You've got reverse, body trades back up. You come back inside it right here. You go long for the premium array, which is right here, which is just about what we're going to hit right now. So upside objective would have been here for oil, and you're looking for that. You're paying yourself. You're using your fib tool. If you don't hit that upside objective, don't write it off and say that sucks. It doesn't work. You should be using fib. There's 50%. Your stop loss. Once you're in here, your stop loss should be moved to break even plus the cost of the trade. Half your trade is taken off here. You wait for 62%. Now you move it all up to 50%. Now you're all in profit. You're zero stress, and you're waiting for 70% to get hit. 70 gets hit, move it to 62. If 75 gets hit, you've hit your premium array. You're done. There, it's just hit the 70% right there, the edge of it. You're done. Your trade is either over or you're just tracing it up now. So you've hit 70, your stop loss is sitting at 62. You're all in profit now. You're giggling to yourself and you're waiting for the 75. If you hit the 75, quickly move it up to 70. And you'll be happy if that reverses on you, comes all the way down. You chased a perfect trade from here all the way up to off to a trade entry reversal for continuation on the downside. So there you go. There's an oil trade for you, or the oil trade. And that's nothing I'm not form fitting that. That's exactly what I've been showing you every morning since we started this show. Bitcoin traded all the way back up inside for a CAM Model 1 entry. So we're coming up to a CAM model entry here for a short. It's in a premium level, so you want to pay a premium. Also a fill of the fair value gap. Not quite, it's just shy of that fill. So it gives you a CAM 1 model entry, and you want to start aiming for discount inside this range here. Look for 50%, 62%, all the way back down like I just showed you in oil. That's a hourly chart. Your 15-minute chart is right here. Here's your reverse. Your body trades up into it right here. Finally, now you're looking for a short. You would have caught a short off of there. Take out that low, pay yourself at that low. If it comes back to that low and gets short, there you go. Trades through it, comes back to the low. Now you're short. So there's multiple trades just inside that little move here to here, down, back to here, down. So, yeah. I think I'm getting Derek's cold. Or being locked in this damp basement. That's what it is. Gold upside. We're looking for upside here for gold. Hit that since this morning. Here's your CAM model entry. Displacement. You come back into a CAM model 2 entry right here for continuation to the upside. Takes out the upside. Comes back into the top of the premium array right there. Follow it across. Right there. Bodies respect it. Trade back above that high. Right there. Look for these candles here to provide support on the price. They trade back into it. They provide support on it and continue going higher. Aiming for your next upside objective. Disney. giving us our reversal. We're looking for that return back into here, 50% of this range, and looking for these imbalances down here in terms of the discount, and see if we can't catch another long. And you're kind of, when we were talking about grading this on the way down, you're kind of grading Disney on the way down now that we've got a trade. If we can get a close below this candle, I guess it would have to be this candle here. As soon as that high closes, if we get a close below that level right there at 113.59, then we're on the wrong side of it. It's coming back down. UNG, let's go UNG. That's what we wanted. I like it. I like it. Carry on. Carry on. This is good. We wanted soybeans to come down. Here's your discount box here. We're inside that. Trade below that level and use this as support to come lower. Live cattle. What else have I got? All right. All right. Well, that's about it, my friends. I think I'm going to call her quits today. Thank you very much for tuning in. We're going into your lunch hour now, so be careful. I do like I am low, or based on my assessment from the weekend, it's still so far manifesting itself. I'd like to see this continue going lower. And until proven otherwise, I'm still bearish on NASDAQ. What's the ES doing? Is it turned around on us? It's now below the yearly open. It's below its low. And Dow Jones, where's the yearly open? I think this was much lower, wasn't it? Its open is right here. Yeah, right there. I'm going to put that on there, and you guys can see that later. Keep your eyes on that level right there. So Dow Jones is the only one that has not passed its open at the beginning of the year. It's slow. The NASDAQ has, ES now has, and the Dow has not yet closed below that low. So that's the only laggard out of the bunch. So still bearish until proven otherwise. It may change up this afternoon. It may change up tomorrow, but right now I'm still bearish. Other than that, that's it for me, folks. Thanks for tuning in. Love you guys. Thank you for all you new people that are popping in. Hit the subscribe button. We're here every morning, and I'll see you guys bright and early tomorrow. And then I'm heading back to Manitoba, Alberta. So I'll see you guys on Wednesday as well. And until then, you guys have an awesome day. Be safe out there.